Hello everyone, I'm Marty Pospischil and welcome to my May market update. We got lots of interesting data to show you today, and I'm going to jump right into it without further ado. You're going to be really excited, I think, if you're like me, about the trend analysis that we have gathered from our real estate board of Greater Vancouver. At the end of this video, do some forecasting. It's pretty good stuff, so hang in there to the end. I know it's a long video, but lots of good stuff here. So we're compiling the stats as of the end of last month, and we're looking at the sales activity year over year for detached houses, and it's down 16%. Not bad. Previous months were down a lot more. Benchmark price year over year for detached houses for Greater Vancouver is down only about 9% from our peak of last year. Month over month pricing for detached houses in Greater Vancouver up 2.9% last month. That's a big jump in pricing in 1 month's time. It's a trend we're seeing. Our market's getting very active. You can see the same in attached townhomes and half duplexes. The sales activity year over year is down only 14%. Prices are down only 6% year over year. And last month, townhomes and half duplexes jumped up in Greater Vancouver by 2.1%. Significant jumps in pricing. Condos, activity down 17% year over year. Benchmark price year over year down only 3% from our peak. And last month, they jumped 2%. It's not going to be too long before we're hitting those peak values from the previous year. Really interesting data that's coming through. Now, as we look at each specific area and we look at different product types, let's bear in mind the metric I'm using is called the sales ratio. And again, as I repeat in every update, the sales ratio, all it really is the absorption rate of product that's selling every single month. So if you have 100 homes for sale and 20 of them sell, you have a 20% sales ratio for that month. And here are the different areas that can fall into. If less than 11% sell every month, we're in a buyer's market and there's downward pressure on pricing. We saw a lot of that last year. If between 12 and 20% sales ratio, absorption rate is a balanced market, so it's not favoring the buyers or the sellers. But if we have over 21% sales ratio in a given month, over 21% of the inventory is being sold, we are in a seller's market. And there's upward pressure on pricing. Okay, so knowing that, let's jump into each area. Let's look at detached houses, Vancouver West Side first. Here are all of the months leading up to last month where we were 20%, and the previous month we're also still at 20% as of 2 days ago, and that brings us still into the very top of a balanced market, but gradually building steam in that detached market west side, just below that 21% seller's market. So we're almost there in the seller's market for houses west side. Let's look at condos and townhomes west side. Last month we were at 33%. There's the previous year. And we can see now we are at 29%. So that's interesting. West side condos and townhomes dropped down slightly from last month's very heated 33%. And that's of course the seller's market, still 29%, very active. And if we look at condos and townhomes downtown, I separate that market out. Last month we were at 20%. This month we are at 23%. So that's interesting. West side activity dropped, condos, townhomes, downtown activity went up slightly for the previous month. That is well into a seller's market. Okay, let's pop into the east side. Let's see what's happening with detached houses on the east side. Last month, we were at an incredible 29% sales ratio. This month, we're at 22%. So we've seen a little bit of a cooling off over the last month. And we're still into a seller's market by 1% on detached houses, Vancouver east side. What about condos, townhomes east side last month? Whoa, 38%. Crazy, crazy numbers. This month we are at 33%. So you can see a very interesting trend. You're seeing that really heated market from a month ago, still very, very active, but just cooling down ever so slightly. Maybe that's because there's not enough product to sell. We'll get into that. Condos and townhomes, east side, of course, in a seller's market. So seller's market, seller's market, seller's market are almost at a seller's market. Very, very active what's happening in the burbs. If we look at the entire lower mainland for detached houses, you can see month over month we had increases in sales ratios in the majority of outlying areas and a couple of areas that, of course, dropped sales ratios a little bit further out, and Richmond and east side. So if we look at condos, townhomes for the lower mainland, you can see the majority of neighborhoods increasing their sales ratio. We had a drop in the North Shore, West Vancouver and North Vancouver, and a drop, of course, out Abbotsford, Langley, Cloverdale, kind of paralleling the houses activity, just cooling off ever so slightly outside, but in the core areas, we're seeing that increase. Okay, now the big question, what's happening with prices? This is interesting. Okay, of course you can see these are the average prices since 1977. I kind of like this graph, the way it increases. Good graph to show investors. But if you look, you can see there was our peak last year for houses, and whoa, look at how far we've come back. Look at townhomes, average price at 1.2 million, and condos average price 103,000. Average price for houses in Greater Vancouver 2.2 million. It's the average for all of Greater Vancouver. They're laughing at us in Winnipeg. If we look at the residential prices across BC, you can see there was our peak in last March, April. We had that downturn last year, and then of course this year we're seeing that price recovery across the board for all product. Okay, now what's going to happen? Where are prices going to go? This is really interesting. If we break it down into the market drivers that I follow, we've got the green market price enhancers. Those are things heating up the market and bringing the prices up. And then we've got the red price deterrents. Now, the most important one out there is inventory. I've been repeating this month after month. There's not enough product out there for sale. They're holding low, and the spring spike in sales prices are jumping mainly because all those buyers are focusing on the limited inventory in the market right now. Really active. Good time to get your property on the market if you've been thinking of doing it. Now, consumer confidence. Remember last year that looked pretty murky and that was a red. It's a green now. Everybody and their dog is out there buying real estate now, and they're buying in droves. Last month, you remember I showed that dam breaking and all the water piling over. Same idea, that's continued. Inflation has gone from red to orange. It's kind of eased off a little bit. We'll see the exact numbers. And with inflation coming down, you can see those increases that took place. The Bank of Canada rates are finally taking that effect and hitting that inflation rate down over time. That's good. Cost of borrowing, interest rates are still high. However, with my forecasting, some of the numbers I got, we can see the light at the end of the tunnel. Now that's also excited the buyers because they can see an end to these high rates coming, and I'll share that with you as well. So there's the consumer confidence. There's a snapshot outside of an open house. Just kidding. Showing the demand out there for housing. And why is that? Let's look at that. There's something about Vancouver that are bringing all these people here and wanting to buy more property. And it's really hard to put your finger on exactly what that is. When you think about it and look around, and I just came inside from a beautiful sunny day, you just can't beat this city. And I think, bottom line, that's what drives our demand here for Vancouver. The sun is out. People are having kids and outgrowing their homes. Mature homeowners are having to downsize into one-level condos. Summer is coming. People are transferring to Vancouver. Young people, are buying their first home. They're having babies. All this stuff is happening. Many people are immigrating to Canada and, of course, BC. Remember, go to last year's market update. You'll see 217,000 people expected to come to BC over a 2-year period, significantly outweighing any loss in the housing demand. Vancouver, in my opinion, and many other people's opinion, is the best place to live in the world. Rents are going way up. Remember the rental analysis I covered previously, they're up 30 to 40% from the beginning of the pandemic. And if rents are that high, why wouldn't you buy something, even though interest rates are high, but they're gonna come down? So do the analysis, it makes sense to buy. And rates are about to come down. Now, about is a pretty loose word. We'll see exactly when that is a little bit further in the update. Also, consumer confidence, unemployment's down. Canada is at 5% still, and BC is at 4.5%. So really good unemployment figures. Year-to-date housing starts. Now let's look at Vancouver. Compared to 2022, we had 4,308 new housing starts. This year to date, 7,118. Significant jump, not double, but significant increase in activity for housing starts. We're seeing it out there. We've got builders and homeowners wanting to build their own home, buying lots. And so you can see that demand already for building lots, and the housing starts is definitely increasing. There's Tiff. Inflation rates are dropping. He's happy. You can see we're down to about 5%. That's the core median inflation rate. You can see that peak and how it's dropped down. That's really good. We're starting to really, over the last couple of months, see the impacts on inflation from the Bank of Canada rate increases that we've experienced over the last 12 months. And that, of course, impacts consumer price index is falling. Things are starting to get a little bit more reasonable. They're not crazy. They're still going up, but not like it was in the peak of 7-8%. So let's pop forward. What happens when the feds are offset from the rates that we're having here in Canada? So there's TIFF, and right now the Canadian inflation rate is at 5%. Okay, awesome. But if you look at Powell, just south of us, our neighbor, the chair of the Federal Reserve, they're at 6.5%. So that's really interesting. Now, it's not a good idea to have a big disparity between Canada and the US's inflation rate. Now, why is that? If the US Fed raises their overnight rate and the Bank of Canada stays put, which is kind of what's been happening, the Canadian dollar will fall. Okay, well, why is that? Well, it's because investors will begin to buy US bonds over Canadian bonds as they'll have a higher return. I would, and most international investors would. And as the dollar falls, the cost of imported goods will increase, further increasing inflation. And if Canadian goods are cheaper, because our dollar is cheaper, to purchase for the US, our exports will also increase, further increasing inflation. So this ain't good. And it's putting a little bit of pressure on the Bank of Canada to start raising their rates because these guys are kind of going to do whatever they want to do. We kind of follow them around a little bit is the way I see it happening. But that's not good to have a big disparity. So we're going to have to watch that. Okay, cost of borrowing. What's happening with mortgage rates? We know they're high. We know all of the increases we had. We had those 8 back-to-back increases of 4.5%. That fiscal tightening policy that Tiff Macklem, the Bank of Canada, did to bring that runaway inflation back to check. It's working. It started just over 12, 13 months ago in March. And it's actually impacting inflation. So it worked, and you can see that variable rate is still peaking out. Where are we going to see a change in those rates? Now, here's the great data I showed you last time. When you graph it, I gathered all this data up and graphed it. Let's just follow the variable rate. It's probably going to remain consistent right until the end of the year and early next year. The turning point, February 2024 seems to be the month where the prediction is the rates will begin to fall. That's going to be a heyday in our market because money becomes cheaper and all of a sudden a lot more people can jump into it. So very interesting forecast, February 2024. Now, inventory levels. We know the relationship between pricing, inventory, and demand, or supply and demand. They're determined by the ratio of supply and demand. Well, the supply, as I mentioned before, is really low. The demand is high. That dam is breaking. Water's crashing. Concrete flying everywhere. A little dramatic, but the demand's high and there's not enough supply coming on. That's what's pushing the prices up. So you can see active listings down in the lower mainland. You can see active listings across BC are down. We had some increases last year, but not to where we need to be in terms of monthly inventory. If we just isolate the west side for houses, the inventory line is this red line. It's supposed to be taking a big increase as we go into spring. Not happening. 403, 455, 480 houses, 476, 478. Why is the inventory not increasing and the demand so high? That's what's pushing our prices up. Same thing for condos, townhomes, west side, just to isolate one area. You can see not much change in the inventory from December to today. So that's a big factor in where prices are going and how active the market is. More specifically, prices, because the market will become even more active when there's more inventory. So it will begin to propel itself. So what's next for prices? Now, this is super, super interesting. I really enjoy it. We'll get into that. One more slide. This is the sales ratio for all of BC. You can see the banded area is the balanced market, and for all of BC, now we've jumped out of that banded area. So we're not alone here in Vancouver. It's happening across the province. So barring all of these other things that we're seeing and reading about, seeing in the news, reading about in the papers or digital papers, wherever you get your news from, another bank crisis with First Republic. What about that debt ceiling that the U.S. is hitting on, I think it's June 1st. It's kind of like you have your mortgage payment has gone up way past what you're making to pay the payment, and you're not going to be able to make that mortgage payment on June 1st. That's kind of what these guys are facing down in the U.S. All these guys hold their hands up. I'm not sure why. But anyways, it's kind of going to be a critical thing, and how will that impact the overall consumer confidence in the financial district and the economy? So things like this people are watching, and of course we're sensitive to that. These are factors we don't have a lot of control over, but are impactful in what we're doing. So leaving that aside, let's go into some data analysis. Now, this is quite interesting because you can determine where prices are going by analyzing previous fiscal tightening cycles and comparing it to the current one. Well, the Real Estate Board of Greater Vancouver has a great economist. He's a director of economics and data analytics, Andrew Liss. And he has done some pretty incredible analysis on the tightening cycles from 1980 to today. Now, the tightening cycles are the shaded bands, and that's when the Bank of Canada raised rates previously, like happened last year to bring inflation under control. He analyzed 1980 to 81, 83 to 85, 89 to 90, 94 to 95, 97 to 98, 99 to 2000. This is what economists do, but there's really good info that comes out of this. 2004 to 2007, little one in 2010. Remember the Olympics? Whoa. 2017 to 2018, and of course, 2022. Those are the tightening cycles that Liss analyzed. Liss analyzed. And if you take it one step further, now, you analyze that data, and going back to 1980, you can see all of those tightening cycles, but then you can compare it to sales volumes and price data following each tightening cycle for a period of, say, 36 months. So we got a 3-year period following each of these tightening cycles. Bear with me, there's a lot of data here, and you can analyze the data. So there's different ways to do it. You can do index sales for each tightening cycle. You can look at the raw data. You can look at seasonally adjusted data, or you can look at trend analysis of the data, and that's the cleanest. So that's what was done here. And if you continue along and look at what the analysis showed for the tightening cycle home sales. So this is volume of sales following each of these tightening cycles. So I know there's a lot of lines on that graph and there's a lot of colors, but the interesting point is this is the beginning of the tightening cycle. And you can see quite clearly that not every tightening cycle resulted in a drop in sales. Some of them went up, some of them went down, some of them are all over the place. And some of them came back to their previous levels very close to after the beginning of the tightening cycle. So fiscal tightening didn't always work, interestingly enough. Now, the current tightening cycle most closely mimics the 1980-81 curve of fiscal tightening. So if we go to that cycle and isolate that, let's do that here. We're looking at home sales 80-81. You can see right when the fiscal tightening happened in 80, you can see what happened. It dropped, all the activity dropped, then it recovered and went on. This is overlapping the data of our tightening cycle from last year. Wow, you see sort of a relation there that it's kind of mimicking that cycle or repeating that cycle from 80-81. Now, that's really interesting. If you go further and you analyze average home price following each tightening cycle, I kind of love this stuff. This is really, really cool. You can see all of them, some go down, some go up. But interestingly enough, our pricing from the 2022 tightening most closely resembles that from 1982. Okay, so if we go to the 1982 average home price tightening cycle, there's the cycle that we went through in 82. And here's the pricing cycle that we are currently going through now for 1982. So you see how this is kind of interesting, because if we are indeed following that tightening cycle, you can make some assumptions, assuming that the trend is going to be the same. Remember, these are the, I'm taking the MLS Housing Price Index for all property types for the west side of Vancouver, just to pick one area, isolate it. Here's where we were in January, here's where we were in February, and here's where we are now. What's happening? Of course, the Housing Price Index is going up. Prices are going up. Wow, that's great. We know we're in an active window. We know supply is low. We know demand is high. So we know prices are going up. That's our graph. And then I thought, okay, how does that compare to the fiscal tightening trend analysis that was done by the Real Estate Board of Greater Vancouver? So again, the factors that we're looking at here positively is low inventory, consumer confidence, inflation's now orange, not red, interest rates are still high. When's that listing inventory surge going to happen? Freeze that information, take that graph, and what does that look like in terms of our trend analysis? So let's go one step better. And let's take the trend analysis forecast that we think we are emulating now with our present resulting price market from the 2022 fiscal tightening. And then we realize that, remember, that began in March of 2022, and we're about 12, 13 months after that, which is right here. Whoa, okay, so that's cool. You can see it's actually had an impact on prices. Now let's go one step further and let's take the data I just showed you in the previous graph, and that's going to fall right into this period here. Now, these graphs are in different scales, But you can see we might very well be following this particular trend upwards. Really, really interesting. Now, if that's the case, you can extrapolate from where we are today, and you can see, wow, we might be hitting a peak at about 18 months. We're at 12 now, in about 6 months towards the end of the year. Good to know. So you can do a little bit of forecasting assumptions with this trend analysis. Really interesting. Let's go further. Remember the mortgage rate forecast that I graphed earlier, and I showed you that in February 2024, we're going to be seeing a bit of an explosion, maybe not even a bit, but an explosion in demand because the mortgage rates will start to drop. Well, that's going to be in February 2024. That's right here. Wow, everything's starting to align for an extremely active market at the end of the year, early next year. So this is really interesting. If you take all of this into account, we might very well have hit the bottom of our market. Barring any other failures and ceilings and all these other things that can happen. If this trend continues and we indeed follow the 82 fiscal tighten policy trend that took place, we could be back to another peak at the end of the year, early next year. Interesting stuff. This is really, really cool. So in conclusion, our market has stabilized and in fact heated up. The full effects of the Bank of Canada overnight rates increases have actually taken place, and they may have already had their full impact because we see that inflation coming down. Inventory levels are still way too low. Big factor, because that can change at any moment. Prices may in fact continue to increase if we have indeed hit the bottom of the tightening impact curve. Barring a recession, more bank collapses, more fiscal tightening, US debt ceiling crises, wars, invasions, all sorts of things that can happen, we may in fact be in a stabilized, recovering market. Prices may continue to increase past last year's levels in the next 7 to 9 months. Whoa, interesting. A lot of factors, things can change. Now, keeping you informed. Thank you for watching my market updates. 4,900 people watch the market update on YouTube and 34,500 on our Facebook page. Thank you for watching. Let your friends know. I'm happy to get more and more subscribers. I'm trying to hit some goals with the subscriptions, so please pass this update around. I would love for more people to watch them. And also, keeping you informed as well, I've got some new fireside chats which you've just launched. What first-time buyers should know with Carolyn McGuire, local notary, and mortgage fraud and how best to prevent it is available on all of our sites to either watch on YouTube or listen to a podcast. Coming up on May 8th, I'm going to launch Co-Owning BC Property, also with Carolyn McGuire. On May 18th, I'm going to launch Renovating and Building, what you should know if you're doing a big renovation or if you're hiring a builder, and that's with Steve Marino from Marino Contracting. Excited about that one. On May 29th, I'm going to launch the Landowner Transparency Act and registry. Doesn't sound exciting, but very interesting. You should watch that. There's some stuff in there I didn't know. And finally, on June 8th, we've got home staging with our own home prep coordinator, Jennifer Correa. We're talking about how to prepare your home for sale. Quite an interesting one to watch as well. So let's have a fun fact right at the end of my update here. This is really interesting. At the end of 2022, December 31st, 2022, which city had the most millionaires? And how many millionaires live in each city? I've kind of been curious. Well, it was New York City, had 340,000 millionaires, 58 billionaires, and it changed by 40% over the last 10 years, increased by 40%. Everybody's moving to New York. That's interesting. Now, here's a fun fact. The Bay Area, San Francisco, had more billionaires than New York, but less millionaires. Okay, there's a message there. Really interesting. Not quite sure what it is. And also, no surprise, Hong Kong lost 27% of their millionaires over that 10-year period. We all know why. And the city that lost the most millionaires over the same decade was Moscow. It declined by 44%. Okay, now what about getting some more data that ties in locally? Let's look at the city, country millionaires, centimillionaires, and billionaires. Here's Vancouver. We have 37,300 millionaires. Well, I think if you own a house in Vancouver, you're automatically a millionaire. So there's actually a big percentage there. But we also have 6 billionaires. And then I was thinking, where do those 6 billionaires live? If you're watching, call me. I've got some great investments I can show you. Kind of an interesting stat. But if you look at another city like Montreal, which has 1.6 the population of Vancouver, has almost half of the millionaires and about a third of the billionaires. So that's really interesting. The very wealthy prefer Vancouver. I wonder why. So that's kind of interesting. Super cool stats. I hope you enjoyed that. That is my May 2023 market update. I'm Marty Pospischil. You can find all of these on YouTube and on Facebook and on Instagram. And if you're into podcasts, go to Apple Podcasts, Spotify, or of course, Google. All of our podcasts are on there. We've got lots more launching, as I've noted in a previous slide, and I want to thank you for watching. It's May. Enjoy your beautiful city. Let's get out there, ride our bikes, go for a run, go for a swim. Ocean temperatures rising. Why go anywhere? We're in the best city in the world. Thanks for joining me.